Hello everyone and welcome back to my channel. This is episode 2 of the Glow Up Diaries, where I am going to be documenting my progress towards achieving my short-term and long-term goals. I also look forward to sharing my favourite quotes, books, products and experiences along the way. If you haven't already seen episode 1, perhaps get up to date with that first. I'll leave a link down below. Also in that episode I explained how we're going to be accountability partners. So if you haven't already, go back to that video and comment one goal that you're trying to achieve this year, and each week I'm going back and I'm going to comment and check in with you and see how you're doing. I am relying on you to do the same thing though, by the way. We're accountability partners, right? Deal. Now let's get started. In the last episode, I explained how I'm splitting up my year into quarters and setting quarterly goals in the following categories: finance, career, relationships, appearance, home, and health and fitness. In this episode, I'm going to be talking through my progress with my financial goals for the first quarter of the year. Some episodes I'll discuss multiple goals and different categories, but because it's been a whole month, there's like a lot to catch you up on. So let's just start with finance. I have officially finished my first finance related book of the year, Rich Dad's Guide to Investing. I actually don't recommend this to everyone just yet, but if you haven't already read his first book, Rich Dad, Poor Dad, then I definitely think it's worth a read. I will be rereading it this year. So the author's dad represents the traditional view of work and money. Go to school, get a good job, climb the ladder, like prioritize stability over independence, and then like spend money without a clear long-term plan. His best friend's dad, however, has a more controversial approach. Work for a salary if you need to, and basically aim for financial independence. Growing up, the majority of us have been passed on the views of the poor dad, the traditional lifestyle that school and your parents typically teach you to adopt. This is what the author's actual dad, Poor Dad, taught him. However, the book shares his lessons in life taught by his rich dad, his best friend's dad. He mentored both of them from a young age, and basically it's a book about what the rich teach their children. I don't know about you, but like that's something I really want to know about. His third book, Rich Dad's Guide to Investing, delves into his life as an adult, explaining that true investors focus on acquiring assets rather than liabilities, building businesses and developing their financial education to create long-term wealth. The book stresses that anyone can become a sophisticated investor by learning to think like the rich, taking calculated risks, and continuously expanding their financial knowledge, which is exactly what I intend on doing. I'm going to take some time to go through the key points, reread some sections, and perhaps read some detailed summaries online. Then I'm going to write down some notes and takeaways to use in my own life. I'm also going to read at least one more finance related book this quarter, so I'll obviously update you on which book I choose and my key takeaways. So as a reminder, these are my Q1 financial goals. Create and use a spending tracker on Excel. Invest said amount in Trading 212. Set up my pension account and combine all previous pensions. Update my Apple Wallet with all of my loyalty cards. Sell old clothes on Vinted. Going through my first quarter goals of 2025, it's going pretty well. I had a very productive get your shit together January. I have officially gained access to all 3 of my pensions. Better late than never. So I have my current job and my previous 2 jobs. My next task is now to combine them all so all the money is in one account. My Apple Wallet is up to date, and I surprisingly had some points on both my Nectar card and my Boots card to spend. Love that for me. Walking out of Boots with a brand new lip liner that I didn't have to pay for, like my points paid for it, was such a good feeling. And I'm currently wearing it now. So one huge goal of mine is to track my spending in 2025. I have created and been using an income and outcome tracker on Excel spreadsheets that has quite possibly changed my life. Call me dramatic, but let me show you this beauty. Okay, here it is. This is the spending tracker that I have been using. I did actually get a template from this girl on YouTube. It was a free downloadable template. It came with instructions. It's amazing, but I personally just changed it to suit my lifestyle a little bit more. So this is all stuff that I've added, like all of these was not included. This was a big part of the template, but I've personally just changed the 3 categories. So I've done needs, wants, and future you, and then over here it basically, you can allocate what percentage of your income you would like to spend on each of the categories. So let's just add some random numbers over here. For example, let's just add £2,000 for a salary. Okay, so you see how the percentage has changed. So now if I say I spent, I don't know, £100 on education, it's now saying that I've spent 5% of my salary on this category. Obviously, it will go up and change throughout the month because I will update this every few days. So let's go into detail on some of the categories. This section is for my income, and it will calculate the total income. The reason why these are 0 right now is because I've got it automated. So if I go over here, dun, 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 this is my side earnings. Say I earn £10 selling some jeans on Vinted, which I actually did the other day. It's now changed my total for my side earnings to £10. This will automatically update over here. Okay, so now my total income is now £2,010. Over here is where I track all my trades. So this is where I do the money I spent on investing, and this is the money I have earned through investing. So if I sell, I don't know, I get £100 from selling some Google shares. Oh shit. 3rd of February. And I just write Google. Now automatically updated, so I've earned £100 from selling Google. I actually only do the profit, so I don't write down the full amount. It's just like what profit I've earned from selling a share. Now it will be over here. So I've now earned £100 in trading, so now it's 2,110. Exact same thing with interest. At the end of the month, say this chip is a savings account, so here you might earn £10 interest from that. Another savings account, but I actually only get this annually, so let's just skip that for now. I might just get 0. Trading 212, I get interest on my cash ISA, so say I get like, I don't know, £5 there. And then money box, this is from my lifetime ISA, so say I get like £30 there. Boom. These are completely fictitious amounts, by the way, so don't take these personally. So now I've got an income total, and so over here, it's now saying that I haven't spent all of my income. The things that I track and automatically totals over here is transportation, eating out, and like investing and stuff. So say I spent £20 on the 4th in Tesco's. Boom. And then I might spend another £36 on the 10th in Lidl. Okay, so this will automatically total here. And let's just make up some random things. Say I spent £45 on the 7th in the restaurant Pho, or Pho. I don't really know how to pronounce it, but it's delicious food. And then it's doing this, okay? I might also spend £7 on some cookies the next day. Any random cookie place. Me and my sister love cookies. So here we go. Also, this is my travel. So say I top up my Oyster card, might just top up £20. I was doing it individually, but it's such tasks, so now I'm just going to do every time I top it up. Say I topped up on the 10th, and then I'll just put Oyster. Or I might go get the train home for the weekend, which is about £40. I'm literally making so much stuff up. And I might do train home. Boom. Okay, so it's my total. Let's add some £100 on the 1st to S&P. Boom. Okay. Now we've got some random numbers. Let's have a look at the maths. So, as you can tell, it's all updated. So over here, it's automatically done things. I also will just add some other stuff. So say, I don't know, I spent like £50 on Amazon, or I went to the theatre and spent £25. I also might buy some clothes on Define, because I'm obsessed with their gym clothes, might spend another £70 there. And then I also need some shampoo, so hey, boom, £5. Groceries hasn't automated, so let me just show you the formula because this hasn't actually gone through. So you press equals, you do sum, you click it, and then you go over to groceries and you just enter this. So now every time this updates, so £56, it will automatically come over here. So now once you've started filling things out through the month, it'll update. So I've currently spent £518. So this is 5% through needs, 9% wants, 9% future you. Obviously, everyone's needs and wants are very different. So let's not judge, but personally, I need to go to the gym. That is a need for me. So I need that gym. Yeah, I know my gym's very expensive, but you know, it's a lifestyle. Transportation. I need transportation. I need my phone bill. It's like £10.50 or something. Groceries, obviously need groceries. Healthcare, like dentist appointments, if you needed certain medicine, blah, 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 that's a need. And for me, toiletries is a need. Obviously, it depends on if you're a bit bougie and you like all these extra things. In the future you, this is like a big priority for me, is like investing, savings, education, stuff for my business. Audible is its form of education, so I will quite happily put $7.99 each month to show that I am spending that much towards educating myself on all my non-fiction books. So yeah, that's basically what I've been doing. This links to my next goal of investing a set amount into Trading 212. Here I am tracking every share that I buy and sell. I'm mainly a long-term investor, but I do dabble in some short-term investing if I see a good opportunity. Over the past 5 months, I have been doing a lot of research into the stock market and specific companies. Disclaimer, this is not for the faint-hearted, and obviously buying individual stocks is very risky. I started out auto-investing into an index fund each month to hold for the long term, which I still do. I still prioritize each month. An index fund is a type of investment that automatically follows the performance of a group of stocks rather than just one singular one. For example, the S&P 500 tracks the 500 largest publicly traded companies in the USA. So some companies may go up and some share prices might go down, but you aren't putting all of your eggs in one basket. So to summarize, for the remaining 2 months of this quarter, I need to combine my pensions, so that's all in one account. I'm going to continue to invest what I can in my Trading 212 stocks and shares ISA until I reach my Q1 goal. I'm also going to continue using my gorgeous spending tracker. If you made it to the end of this video, then you are clearly very interested in improving your financial situation, or generally just trying to learn more and be better, which is exactly what I am trying to do and I've been prioritizing for the most recent years. Financial education is so important, but definitely something that the majority of us are like never taught. If you have any questions or video ideas, I would absolutely love to make some more videos on the topic, as it's now like such an important part of my life and the financial independent life that I wish to create myself. In the next episode of the Glow Up Diaries, I will continue to share my progress on the other Q1 goals. I hope you join me for the journey. Subscribe and I will see you then. Bye!